we are going to look at what we call a general journal. Someone may ask, what is a general journal? A general journal, it is a financial statement that shows a credit and a debit system of a transaction. How transactions are awarded, basically on the position that they are in. So one may ask, before looking at a general journal, do you know the process of what we call a double entry system? Double entry system. A double entry system, it is that a system where you record the transaction on first the debit side and the credit side later. The debit side, it is that side in a simple layman's language, the gaining side. We are going to look at many transactions. We are going to have now the language that this transaction is going to be debited, the other one is going to be credited. And then credit side, it is that losing side, the losing side. In a simple detail, a debit side, it is that side of a financial statement that records all the transactions that enter into the business. And the credit side, it records that all transactions that go to the credit side, or all transactions that make a business to lose its capital, to lose its value. And we are going to, one may ask another one, our dear viewers, the process of a double entry system. The process of a double entry system. One may ask, we are going to look at such languages: assets, liabilities, and owners' equity. Some what they call capital. So here, under the double entry system, you just know that we are going to look at such languages where we say that all assets that are gaining are going to be debited on in the side of our journal, or let it be a cash book. Then liabilities, these are financial obligations that a company is owed, or in simple details that these are transactions that a business spends on. Then owner's equity, it is simply what we call a working capital of the business. And under the process of the double entry system, all assets are debited and liabilities are credited because they made the business to lose. Unless otherwise, in a few circumstances where we're going to see a decrease in liability that is going to be posted on the debit side of a cash book, or a general journal, or another statement of a financial. And then capital, capital. Capital, it is all about what an investor or what an individual at the start invests before starting up a business.
Opportunity to thank our dear sponsors, Bethel High School. This school is located in Bunamwaya. When you reach Bunamwaya, there is a find this good school. It has a UNEB center number. For those who would like to take their kids on this school, those are the contacts. You can reach out to Bethel High School.
We are going to go through in each and every transaction. But remember, don't forget that while starting up any financial statement, we should start with a heading. And the question states that the business is called XYZ Limited. You code XYZ Limited, General Journal for the month of January. That is a full complete mark. And then afterwards, a general journal looks like it starts with a date as the particular. One may call them details. There could be no mistake done. One may call them any, but we have here in this column the particular or the details. Then lastly, we have the debit and the credit. Remember, with the specific feature of the general journal here looks like you give a reason as to why you have posted that transaction on that. So here they are telling us that on 1st January XYZ Limited started business with the cash at hand and cash at bank. Cash at hand was 2 million and cash at bank was 3 million. Here we are going to look. Here we are going to form two or more than accounts, because this is the starting capital that was invested or that was induced into the business. Here we are going to look at, remember, all transactions were recorded in January, and as at first started business with the cash at hand, cash at bank. Here we are going to look at, remember in the previous videos that we made, that all assets are to be debited, unless in a few circumstances, but all assets are debited. And one may know that all assets, an increase in an asset, it is debited. So here they introduced cash, cash at hand and cash at bank. Those are the two accounts that are going to be formed on the debit side, and they are telling us that cash at hand was 2 million and cash at bank it was 3 million. How are we going to balance this account? Here, you are going to first put into your mind that this is capital, the initial capital that was induced into the business at its start. It was on 1st. And what is going to be that account that's going to be credited? Remember that cash at hand, cash at bank, these are assets and are debited. And in simple details, they are capital. Capital. Remember, you are starting with the capital. Remember, you are spreading capital. You are going to credit the total amount of these accounts. That is 2 plus 3 million. That is 5 million. You see, the general it balances itself. This is 5 million, whereas it is broken into down, and this is 5 million. And here I told you in the previous video that it has a specific feature as to why you are creating these accounts. Don't forget that all these are accounts, cash at bank account, something like that. And then you give reason as why. Being cash introduced in the business, then you close that transaction. At the eve of the business, this X, Y, and Z had the cash at hand, cash at bank. That was 2 and 3M respectively. Here, and the capital here, the total amount. Why are we crediting capital? Because it is the capital that we are getting to the other accounts, and it is, you don't record, you don't break down into, but you add the total of this to be this 5 million, because 2 million plus 3 million is 5 million, and that is it. That is how our first transaction should be recorded. And then they are telling us that on second, Jenny purchased goods for cash. Purchasing goods for cash. Purchasing, one may ask, purchasing goods for cash. What are those two accounts that can be created? One may give into a quick insight. We have purchases and the cash, but which is going to be account that is losing and which is gaining? Here on first, on second, that we purchased the goods for cash. It means that we lost the cash to purchases, and one may come up with this. Here we are going to debit purchases because it is purchases, it is debited from cash, and it was at that amount of 600,000, and then we lost cash to purchases. That transaction balances itself like that, and then you give a reason as to why. Being purchases bought by cash. Being purchases bought by cash. And that is the reason. Don't forget that here we award each transaction that is entered into correctly. We give a tick. We give also a tick. Each transaction, it is awarded 2 marks. Then, as you have seen, since you can all see our space, it is not enough. So what we are going to do, we are going to improvise we are going to continue from this transaction. Now I'm going to wrap off, but remember, while you are writing in your books or while you are recording in your notebooks, you should start date per date. You can see me rubbing off since I have a little space. So we stopped on the transaction that was made on 2nd January. So on 3rd January, on 3rd January, John bought a motor vehicle for cash that was 1.5 by check. Look at such a transaction. Jane buying, someone in names of Jane buying a motor vehicle. You should specify what is a motor vehicle is. One may specify motor vehicle to be an asset. And under this, you remember that all assets are debited. And this asset in names of a motor vehicle was purchased by check. It means that money at bank reduced. So we are going to debit the bank, and we are going to credit the bank and debit the motor vehicle because it is an asset. Here, on 3rd January, motor vehicle account, it is going to be debited by 1.5 million by 1.5 million. Remember, whether you don't abbreviate the monetary value because this is financial account. The process of recording financial transactions in monetary terms, please don't forget that. And here we are purchasing the motor vehicle by check. One may say, why am I not putting check account? No, we don't have a check account, but instead of a check account, we get always check from bank, and we have the bank account. And we are going to credit the bank account with 1.5 million. And there is specific reason as to why, and someone may give a different phrase, say, to record motor vehicle purchased by check, not by bank, because checks are from banks. And then that is how that account looks alike. It is balancing 1.5 and 1.5. It balances. Remember, the principal rule of a double interest system, we have balancing figures. The debit side must balance with the credit side of the cash book. And here, on 7th of January, because that is how this transaction were recorded. On 7th of January, said Jenny sold the goods, Ugandan shillings, 3 million cash. Here, Jane sold the goods for 300 cash. One may ask, Jane selling again for cash. Jane is selling. one may get a quick instance. It means that in that transaction, we have sales and we have cash. Reason as to why we don't record names of these people that are buying. We are going to go to other tutorials. We are going to distinguish these accounts because we have nominal accounts, we have normal accounts, as we are going to see in the next tutorial. But here, when they have given us a specific sale that is Jen sold goods for cash. Yes, according to that transaction, Jen selling goods for cash. But have you subscribed to our online channel, YouTube online channel? Remember, don't forget to subscribe to our online channel. It's called Moto Online. And please, viewers, any comment, any suggestion, any supplement, you are free to comment. We will be answering you all of you each, and we are going to give you ample time. So here in the next transaction, Jen was selling, but remember the transaction was recorded on 7th. It is not in order that all transactions are recorded in a chronological order, that they are starting from 1 up to 10. It depends on how the question looks like. Look at such a question. Some transactions were done on 1st, 2nd, 3rd. Now we are on the 7th. On the 7th of January, this transaction was recorded. So Jan was sold goods for cash. Here, one may say, which accounts am I going to record? Sales is going to be one gaining or cash. Someone selling goods for cash. It means that cash, it is gaining. We are gaining cash and we are losing the sale. And here we are going to have the cash account to be debited. And remember, Jen, she's the one selling these goods. But don't forget, we do not include names of these people that are transacting. Say, cash account. Remember, initially we had a cash account. So, sold the goods for cash, that is 300,000, and we are losing sales to cash. Rather, cash, it is gaining from sales. That is 300,000. You give a reason as to why. Say, being cash sales, or to record the cash sales. Anything you could record. To record the cash sales into business home, one may stop. You see, this transaction, it is recording itself, and it is balancing by 300,000 and also the 300,000. But remember, don't forget to subscribe to our online YouTube channel. It's called Moto Online channel. Please comment, feel free, comment, like, subscribe. Our dear viewers, you can see our space isn't enough, but I am very sure that you are noting, you are taking a few notes on how these transactions are following. So here we are going to save our space here. We try to minimize the space, but in other tutorials, I assure you, we are going to have enough space. So our next transaction, it was made on 15th. Let me remind you, it is not in a chronological order that these dates are recorded. It depends on the question that you have come across. So here, they are telling us that on 15th January, purchased more goods on credit from TK Limited, worth 500,000. In this transaction, they are purchasing goods from a creditor. Someone may ask, who is a creditor? A creditor is that person who gives goods on credit. And a debtor is that person who obtains goods on credit, who or who gets goods on credit. So here in this here we are looking at this transaction as purchase. These purchases were purchased on credit from TK worth of 500,000 purchases. It means someone on a debt, layman's language, could anticipate the purchases account to be one of the accounts that is going to be recorded. And since there is no alternating account, we are free to record that person who these purchases were bought from credit. Remember, that person was TK Limited. So on this transaction, we have these goods were purchased on credit from TK Limited worth 500,000. Here we are going to debit a purchase because purchase it is gaining from TK Limited. Purchases account. Purchases account to be 500,000, and TK, since remember TK is only giving goods on credit, so we are not debiting TK, rather we are crediting because TK did not have the money or did not receive any money. So TK Limited has to be 500,000. 500,000. And you give a reason as to why. Anyone may change the paraphrasing, say that to record purchase, to record credit purchases, to record the credit purchases from TK Limited. Remember, each transaction you post, its rate mark. So this is a mark and this is a mark. So each and every transaction has 2 marks. And here on the following transaction, we are having on January 20th, obtained a bank loan of 3 million cash. Look at such a circumstance. We are obtaining a bank loan. We are obtaining a bank loan of 3 million cash. Someone may ask, obtain a bank loan, again for land, for cash. How can we record such a transaction? Surely, someone may say, someone is obtaining a bank loan. It means that you're going to have bank and loan. And someone may ask, sir, I'm saying a bank and a cash. Really? No. And here, which accounts can come into your mind? So here, in a simple man's language, we are obtaining cash from the bank, and we are obtaining it through the loan. So here, we are going to have a cash account being debited with 3 million. Don't forget, we don't abbreviate shillings. I mean, these monetary values while we are in fundamentals of accounting. Then here we are crediting the loan. Someone may say, why are you not recording a bank? No, because a loan, it is a liability to a bank. And given due to a reason as to why loans, remember, we are getting them. It is a nominal account. Here, when we are going to look into other tutorials, we are going to see loan to be a nominal account. So we are going to see ledgers, how loans are recorded in ledgers. So here we don't record bank, but instead we record the loan, because loan, it is liability to a bank. So here, loan also 3 million, and you are giving a reason as to why. You could say to record a bank loan. To record a bank loan. Remember, with accounting or with fundamentals of accounting, each and every transaction, it must balance. And the cash, it is 3 million, and the loan account is going to have also 3 million. You see, it is balancing on itself with a specific reason. Remember, a general journal. A general journal. A general journal, it has a specific feature in which it has a reason as to why you are creating those accounts. But have you subscribed to our YouTube channel? Don't forget to subscribe to Moto Online channel. Dear viewers, since you see our space isn't enough, so allow me to minimize it, But remember, while you are in a general journal, since it is a financial statement, a general journal it is a financial statement that records the debit side and the credit side. Remember, with its specific feature that it has its own specific reason as to why you are creating that app, and it is only the general journal that has a reason or that must be created into the reason as to why you are creating those accounts. And here we are going to, and someone may face to a transaction and say, remember we had the ticket limited giving goods on credit, and the next transaction it is ticket limited received cash. Remember, in our previous transaction, ticket was the one giving goods on credit. So here, ticket limited. Remember, the other goods were worth 600. The other goods were worth 500,000. Now here, on the transaction that was made on 22nd, ticket is receiving cash. Remember, this cash, it is being, remember, cash, it is an asset, and cash, it is increasing. So ticket limited, it is gaining, or it's going to be debited with the 500,000. Remember, to balance with the other transaction, because ticket was done, who was ticket? It was initially a creditor. And here, who is paying? It means that the one that is paying is XYZ Limited, because it is done into the business. XYZ Limited, it's going to be credited. But one may say, this ticket limited. Remember, ticket limited, it was a purchase of this business. One may decide to have a purchases account or that name of the organization, but I may decide to use the name of the name of the business. But for me, let me ought to use ticket losing to purchases. Remember, our initial account was through purchases account, and you record a transaction that to record a cash payment from purchases. Or someone may say to record a cash payment from credit purchase. Don't forget that we are balancing it with its fellow amount, that is 500,000. Yes, someone may say, accounting, it's becoming hard. But in a simple layman's language, accounting, since it is the process of recording, summarizing financial transaction, here we see now we have summarized, we have recorded, and we are putting this transaction in their respective books of financial statement. Remember, we are on the general journal. Please don't forget to subscribe to our online YouTube channel, Moto Online. Please endeavor to comment, ask a question, we shall answer you immediately. Then, our last transaction here, it's coming it's coming on 25th of January. Here on 25th of January, Mary paid 80,000 shilling cash. Look at such a transaction. Mary paid 80,000 shilling cash. Mary is paying 80,000 shilling cash. Mary is paying 80,000 shilling cash. So one may ask, what are those two respective accounts? I'm hearing Mary, I'm hearing cash. Someone may look into that we are only having cash and the bank, and no, it depends on the transaction that they have given to you. So here we are seeing Mary paying. It means that we are going to have Mary's account, and cash's account. But remember, initially we had the cash account. Suppose this question asked also maybe after making the general journal. It may ask you make the ledgers and their respective ledgers. Some of you are locked in this, that a general journal must have also a folio. No, it depends on the question, how it has been brought to you. Now here, we don't need the space of the folio, because here, they have not requested us to draft ledgers. So here, we are going to have Mary's account. Here, you must first understand which account is gaining and which is losing. Mary is paying to cash. Remember, here, in a simple layman's language, that cash it is gaining from Mary, or cash account, it is gaining from Mary, and Mary is losing to cash. So cash account is going to be debited by 80,000, and Mary's account, remember, Mary is the one paying off. It means that Mary, she's the one losing. So you are having 80,000 to balance. Remember the specific feature that a general journal has over the other elements of financial books, that the general journal, it has a specific reason as to why you are creating those accounts. And here we could say that to record the cash paid by Mary, someone may say being cash paid by Mary, but let me say, for me, I've taken to record cash paid by Mary. Remember, we are not giving a mark to a transaction that doesn't have a reason. So here, you see our accounts. Cash, it is gaining from Mary, and the cash, it is going to be debited by 80,000, and Mary's account is going to be credited with 80,000 to have a balancing figure. Remember, this general journal, it balances itself, as you have seen in the previous transaction that we have carried out. Each and every transaction balances on its own. There's not this element of that we are going to balancing off here. We are taking this figure to be balance credited. No, each and every transaction balance itself. Don't forget to subscribe to our online channel. Our dear viewers, since this question, it is stopping on transaction that was made on 25th, as we're going to see on our next tutorials, this transaction, we are going to display them, and this time around, we are going to have enough space. Here, we conclude it. And when you add from the transaction that was made on 1st till this transaction that was made on 25th, you're going to find also that this transaction, also when you add the debit side, it is balancing with the credit side. Why? Because this transaction in the general journal balances themselves. Each transaction, you cannot leave a transaction hanging. Each transaction, you are balancing it on its own, provided you visit more tutorials, as you're going to see. So in our next tutorials, in the videos, you're going to come up with a cash book. You're going to look at different terms, different types of cash book. Let me say 1-column cash book, 2-column cash book, 3-column cash book, petty cash book. We have even a petty cash book that has numerous columns that at least confuses people or our dear viewers. Thank you so much for viewing.